Hey everyone, welcome back to the Mortgage Playbook, the show where we talk about all things home buying, lending, and real world mortgage advice to get you down the field in today's market with confidence. I'm your host, Colton Haney, a licensed mortgage loan officer who's still early in the game but passionate about learning from those who have been in it for quite a while. I'm very excited for today's episode. Our guest has been respected in and around the industry for quite some time. From double-digit interest rates to the digital age of lending, he's helped countless families get into their homes and built a great reputation doing so. So y'all stick around because this is going to be a good one. So joining us today is our very special guest, Paul Howard. Paul is a mortgage loan officer over at North Point Mortgage, a branch of Fairway Independent Mortgage. And he's going to join us today and just give us some tips on, where he started and where we're at today. And so it's going to be great. So Paul, thanks for joining us.
Thank you. I appreciate being here.
Of course.
Thank you.
So we'll go through a couple things first. I'd like to, go through and just kind of pick your brain on the early days, where you started and where you came from. Okay. So can you kind of tell us, what you got into, how you got into the industry?
We can go way back then. Okay. So yeah, I've got into business. Really, I don't know if there really were any mortgage bankers such as Fairway back in those days when I started. So I started with a finance company.
Okay.
ITT Financial Services, which back then, you financed, before there were big box stores, you would finance like furniture, appliances, and stuff like that for customers. Okay. That's kind of how you built your client base, even though we did do direct mail back in those days as well. So we did retail financing, personal loans, and really second mortgages.
Okay.
So that's really kind of how I started in the business.
Okay. Awesome.
So, and it was kind of a watershed moment at the time because they were shifting these companies such as ITT and household finance and beneficial to recruiting from colleges at the time. That's how I got hooked up with these guys.
Okay. Awesome. Awesome.
Yeah.
So what would you say has kind of changed the most since the early days versus now?
Everything. No, some things stay the same. Fundamentally, the business is still the same. I always say, obviously the technology and all that kind of good stuff has changed. But what really has changed to me is the governmental intrusion. Some of it's just naturally overkill, but I think that's the biggest thing. It's just a constant, to making it harder to make good loans for consumers.
Mm-hmm. Yeah, I think 2008 probably. I mean, you would know more than me, but that probably had a big chunk. Well,
obviously
to do with
it did, and that was typical overkill. Some of that stuff can be loosened up some. But even prior to that, there were a lot of things happening.
Yeah.
So it's just a constant thing.
Oh yeah.
Constant change.
Yeah, without a doubt. Okay. Over the last amount of time, there's been quite a bit of change. How does today's market really compare to the market back then, whether it's rates, buyers, just overall trends?
I think the biggest thing is the information that the buyer or borrower can get a hold of. And that's not always accurate information. I'm all for being able to compare rates and stuff like that, but just understanding what you're really looking at.
Okay.
So that's changed the way you interact with a borrower and making sure they understand, like, yes, you see that published interest rate, but if you're looking at really small print, there's a lot of discount points or dollars cost, So I think that's not really misinformation, but it's really not full disclosure, I don't think, or trying to make it hard to understand that piece there. So that kind of thing. But other than that, the fundamentals of doing a mortgage loan have stayed the same.
Yep.
Obviously you communicate differently, but it's still, based on, I think you mentioned like the 3 C's or whatever one time about collateral, character, credit, and collateral. That's all still applicable in today's world.
Yeah, no, exactly.
So
exactly, and so in your experience, interest rates they change every single day. And anything can make them move. But in your personal experience, in your personal opinion, what do you see changes rates the most? Like, what has the most effect on rates?
Well, as of late, when Jerome Powell talks, I mean, that's I've never seen a situation where the Fed chairman can get up there and cut the central bank rate, which, as we know, doesn't really affect our long-term rates as much as it does car loans or credit cards or that type of thing. But by the time he gets done talking, rates go up. We'll have a rate change in the middle of the day because it's inconsistent or he's not very clear about where he's going. So the people behind the money get nervous. They don't like that. I always joke, like back when I first got into the business, there was the Fed chairman, it was Paul Volcker. Well, he was a hard-nosed guy, and he'd smoke cigars and say, I'm going to raise rates, and you guys are going to like it. Well, it was tough to navigate that, but at least you knew what you were doing. There was no question.
Exactly.
So the market said, okay, this is what it's going to be, then so we all could adjust. Nowadays, it's we don't really know day to day.
Yeah.
It's really hard to predict what to do.
Oh, yeah.
Yeah. So, this year, as we sit here today, almost at the end of 2025, well, this was supposed to be the year things started coming down, rates got better, and volume picked up. Well, that hadn't been the case at all, as we well know.
Yeah.
So,
I mean, rates have come down slightly, but not where where people were hoping.
Not
and
anywhere close to what they forecasted.
Yeah.
So.
Yeah. Oh, yeah. So, I mean, with all the difficulties in the market, there's been a lot of ideas proposed by the government, or Fannie Mae and Freddie Mac, like Fannie Mae removing that 620 minimum credit requirement for conventional loans. And then, the government proposing that 50-year mortgage. What do you think about all that?
It's just smoke and mirrors. I think they're just trying to put something out there to show there's some light in the tunnel, if you will. I mean, but if you really think about it, there's a reason that the minimum credit score was 620 on a conventional loan to start with.
Yeah.
I mean, because it's all risk-based lending. So, if you think about it, if you're going to do a loan with somebody with a borrower that has under 620 credit score, there's really no advantage to the consumer, I don't think, and they're really going to pay.
Yep.
Because the interest rate, the loan level pricing, or the adjustment to the interest rate will be so high. You'd be better off in most cases just to do an FHA loan in a case like that. So obviously.
Yeah.
And then the other thing on the 50-year, I mean, that here again, that's 50-year term. Well, as you well know, the longer out you lock the interest rate loan, the higher the rate. Well, you're going to the term of the loan. So you lock the rate on a 50-year term. I can imagine what the rate would be on that.
Oh, yeah.
I mean, I think these are just things being thrown out. A little bit of smoke and mirrors. I don't think that's going to correct what's going on.
Yeah, no, I think it's stuff to heighten emotions.
Oh yeah,
that's all it is. I mean, the removing of the 620 minimum is an okay thing for a very small amount of people. There's people that are putting down more than 40%,
exactly,
or 60%, and they're not going to be facing those loan level pricing adjustments that you would face at that.
In fact, I read something and I thought that the article. In the article, the author of the article said, well, we'll see if it really equates to any kind of lift in volume. And I thought that's a good way to look at it. Does it really do anything?
Yeah.
Probably not.
Yeah.
Probably not.
Yeah. Agreed.
Agreed.
So I'm a newer, younger LO. I've bbeen in the industry for, just over 5 years on November 1st. So, 5 years and a month, got into it young.
That long,
yeah, I know, 2020. Wow. But just for any of the younger LOs out there, I've had a lot of really good mentors like yourself and other LOs in the office and our great VPs and managing staff. But for the younger LOs, what's some advice you'd give them just to kind of navigate their way through this tough market and really, put them in a successful spot or help put them in a successful spot?
You've been fortunate that you're here. I think that if you're going to get in this business, try to get with a company that really has your interest in mind. There's so many companies out there that just say, well, we have this to support you, but they don't really, it doesn't get applied to the day-to-day things that you're faced with as a loan officer. So getting with a good company that really wants to train you and has your success and as a forefront is important, very, very important. So,
okay. Yeah. I love that.
Yeah. Because as you start out, you're just not going to know how to handle it. You may have some raw talents.
Yep.
But you need a company that really help you refine things.
Yeah. You can be on the phone and be the best person on the phone all you want, but you can't put together a loan application or tell somebody what's going on when something goes bad because something goes bad in this
Things go
industry every
bad.
single day.
That's right.
So
Every single day.
yeah, I mean, just being prepared and
Yeah.
having that support stuff.
And then I think that builds confidence in a younger person. I think you probably can speak to this.
Mm-hmm.
As you go along, you know, you've seen when something kind of goes sideways, the support you got and get
Mm-hmm.
things worked out, you know.
Yeah.
I mean, any company today that survived through what we've been through, if it's a perfect loan and a perfect loan officer, they can close it on time or whatever,
Mm-hmm.
that kind of stuff. You know, it's with these deals that are tough. You have a lot of support to get the deal done and still close on time.
Yeah.
And I think that makes a big impression on a young loan officer.
Agreed.
You know.
Agreed.
So,
Completely. And, you know, on not only with the company you choose and your training and your own, you know, building yourself up is that important. But a lot of people don't understand that, you know, the company you work for as a mortgage loan officer or, you know, a broker significantly helps your clients as well. Because if they're going in and it's a competitive market and they're putting in offers on 3 or 4 homes with 3 or 4 other offers, those listing agents are, you know, most likely going to look at, you know, every piece of that offer, including the lender, correct?
Well, absolutely. Oh, yeah, absolutely, without question. And we're fortunate here at North Point Mortgage Fairway to have a stellar reputation, especially in the North Atlanta market. So that does make a difference. So I think all things being equal, I think the odds are that the listing agent picks us. Yeah. In most cases, just due to our reputation of getting things done.
Oh yeah.
You know.
Agreed.
And just the whole process of doing a loan with us from start to finish.
Yep.
Is about as smooth as you can get. You know.
Oh yeah.
You always hear one mistake I hear young loan officers saying today is, I don't know where they picked this up, but they love to, maybe the media or whatever, but they love to say, I'll take the stress out of getting the loan done. Well, no, you won't. There's always angst on both sides of the equation, on both sides of the transaction until the loan's done.
Yep.
I mean, that's just the facts.
Oh yeah.
I mean, the listing agent's nervous a little bit, the selling agent, the buyer, you know. You know, and you're watching it close as a loan officer to make sure everything goes smooth. So what you do try to do is set them down the right path and set expectations so they understand what's happening. So if something does come up, they realize what that is and what it means.
Oh yeah.
Yeah, exactly. So,
yeah. I mean, you and your seller's agent, your buying agent, are the glue of the transaction for your buyers. You know, and it's so important to make sure that, you know, you have a good team and you make sure the clients understand how important that agent is to the process. Because I really don't think a lot of buyers really fully understand how important an agent can be to the buying process.
Agents very critical, very critical.
I mean, it's great because I mean, you know, you might, you know, especially if you're listing your home, you know, yes, you might have to divvy up 3 to 6%, 4 to 6% for commissions. But that agent's going to be able to put your home in front of thousands of people, most likely, and just be able to, you know, you might be able to sell that house for 20 or 30 grand cheaper than that agent would be able to sell that house, you know? So it's a very, very, very smart move to always have an agent in your corner.
I don't know if you've had much experience doing FSBOs or for sale by owners. I mean, I've done quite a few. They're just not the same transaction.
No.
And I just feel like there's something missed.
Yep.
You know, emotionally and money wise. I mean, you think you're making the money, but you're probably not. You're probably really not.
Yeah, you're probably netting, you know, a little bit less than what you would with
exactly.
the agent.
Exactly. So you'd be better off with the agent and probably come out the same.
Yep.
So because you don't really know how to negotiate like an agent does.
Yeah.
So
exactly. Yeah. Exactly.
So that's another piece of advice, kind of going back to your question, advice to a young loan officer: try to find the best agents that you can.
Yeah.
Of course, you may be appealing to younger agents getting in the business as well. So you kind of grow together.
Yeah.
You know.
Yeah. One thing that I really, you know, found to be my best way of getting into the door with a lot of referral partners was finding some that are in the same boat as me, you know, finding them that just get in and then really kind of guiding them into how to be successful and providing resources for them. It's all about providing resources for your referral partner.
And they really appreciate that.
Yeah. Oh
because
yeah.
you're helping them grow
Mhm.
their business.
Exactly. And if
It's
they
not
grow,
just
you
about
grow.
you all the time,
Yeah.
in that case. So
Yeah.
they like that. So,
Yeah. No,
without
exactly.
question.
All right. So kind of looping more away from, advice for younger guys and younger ladies, kind of looping more into client experience. There's a lot of tricky topics in this industry and a lot
Mhm.
of moving parts. How do you kind of break it down and explain it to your clients to where they can really understand what's going on throughout the process?
Yeah. Okay. That's a good question. Um, well, the more doing a mortgage isn't as complicated as people think it is.
Hmm.
It's behind the scenes can get complicated because once the mortgage loan is made, then it's a financial instrument that's bought and sold.
Yep.
There's some complexity to that whole piece of the equation. But when you're dealing with a customer, I think just being honest and upfront and just say, okay, to verify your income, we have to verify your income.
Hmm.
For example, and that requires whatever the writing guidelines would be. One thing I always explain to them: these aren't necessarily Norpoint or Fairways guidelines.
Yep.
These are Fannie Mae or Freddie Macs or
Mhm.
FHA, VA, it may be, and all lenders have to deal with
Mhm.
it. So explain it to them in terms. Okay, we need your last 2 years W-2s,
Mhm.
and a year-end pay stub to show. I see you have overtime in your income. That's how it shows overtime.
Yep.
W-2 show your total income, it doesn't break it out.
Mhm.
And for instance, we're required to break that type of income out.
Mhm.
So you just explain it to them. If you just think about it, it's really not that complicated
Mhm.
to explain those type things to them.
Okay.
And then interest rates, I think one of the best things that you can tell somebody is interest rates are primarily driven by the combination of two things. One is the loan to value, or how much you're borrowing against the value of your home, okay, and your credit score. So you put the two together, and it's risk based. So obviously, the more you put down on the house, and the higher your credit score, that's deemed lower risk.
Mhm.
Therefore, you get a better rate.
Yep.
That's simple as that.
Yep.
And then if you just put it in simple terms like that, they understand what
Mhm.
you're talking about.
Oh yeah.
Exactly. Sure.
Okay.
And I just try to break it down as just convert it to layman terms.
Mhm. Yep.
Mortgage insurance. Explain what that is. It has a bad stigma because it used to be very, very expensive. Now it's more driven to the risk base, so it's
Mhm.
gotten better.
Yep.
And explain that kind of stuff because I'll see, you know, um, companies advertising these ridiculously low rates and say apply it now. Well, if you went through that process, you're going to pay a couple points. Well, anybody can do that. I mean,
Mhm.
that doesn't. To me, that's false advertising.
Yep.
I think it's a bait. That's a clearly bait switch.
Mhm.
That's something you want to regulate something. That's something to step in and say you can't do that anymore.
No. No, I agree.
You know,
I agree.
so
I agree. Yeah. No, 100%.
what's your
So,
par rate?
yeah, exactly.
What are you advertising that doesn't cost the customer any more money?
Yeah. Yeah.
Then you talk to them and say, give them an option. Okay, well, if you like a little bit lower rate, we can do this.
Yeah. No, exactly. Exactly. Looping back into technology, how would you say that has kind of affected your process or helped your process?
Well, it definitely helps us as far as communicating with clients.
Mhm.
I mean, there's no, they can obviously get documents to us quicker. We can get things to them for signatures and stuff like that to make the process smoother.
Mhm.
That's helped a whole lot on that thing. And then AI is even making it even better
Yep.
from that standpoint.
Mhm.
So I think it helps loan officers that they can spend more time with the relationship,
Mhm.
which is important.
Oh yeah.
Because at the end of the day, that's all just kind of building the vehicle. Um, you know, technology and all that, dealing with the documents and stuff like that. It's really okay. What am I doing? Am I making this customer happy?
Mhm.
Are they going to be happy with this transaction? That comes from you.
Yep.
So
Yeah. Exactly.
yeah,
Exactly.
I think technology's helped a lot in that way.
Agree.
And then, like you did mention, double-edged sword with other pieces. Just getting information that's just not right,
Mhm.
or not completely right.
Mhm.
You know.
Yep. So kind of switching up topics again, like maybe looking towards more in the future. Looking ahead, where would you say, the industry is going over the next, let's say, 5, 10 years, maybe?
Sure. That's a good question. Who knows?
Yeah. Oh, yeah.
Well, obviously, I think we just got done talking about technology. I think that's going to affect our business and the speed and how we get things done, as it probably affects all industries as well. But, I think that it helps us because it's still a relationship based business. And that I think that's going to free you up more time to do the marketing and things that type stuff that you need to do in today's world to be successful.
Agreed.
So, but I mean, hopefully, we continue to look for different type of products, development of products and stuff like that within the industry, because that's helped a lot. Because it's just not, 40 years ago, you make a loan to most people were W-2. Self-employed loans weren't as prominent. You see more of that now. People working side gigs and stuff like that. So offering those type of people products.
Okay. Okay. I love it.
Like that. Yeah.
Yeah, I love it. And obviously, kind of looping back into the younger people or the newer people into the industry, especially, maybe more towards the younger, with the way we can kind of navigate technology. What do you think we can kind of bring to the table as a edge compared to, people who've maybe been in it for 10, 15, 20 years?
Yeah, you definitely have an edge on that because, for instance, when I was younger, I depended on branding to be done by the corporation, and they weren't really branding me; they're branding the company. Whereas nowadays, you can brand yourself, with the support of your company behind you. And you get to do that from the very beginning, and obviously through social media, you can reach out and put yourself out there and who you are to a much bigger, wider audience faster.
Yep.
I would make relationships, meet people face to face. It was the old face to face, we did do branding and stuff like that, but it was just a different world.
Yep.
So, you have that ability to do that. Now, I still think you got to get in front of people at some point, and get to know them, but you certainly can bring that to the table. And my advice would be to you to just become a super brander.
Okay.
I mean, of Colton Haney, because you have the company behind you.
Yep.
So, that's the key right there. So,
Okay.
I tell people, like, I'm not going to say it on the podcast, but my world is like the scene in Tommy Boy where he's sitting at the table at the wedding and negotiating brake pads or something with that guy. And he's like, well, I mean, it's kind of a handshake. We make the deal right there instead of I can say anything I want, put anything on the box, but it's me and you doing the deal.
Yep.
Exactly. So
exactly.
That's kind of the way my world was. Where yours is now. You can reach more people.
Agreed.
Faster. You don't have to just sit at the table all the time.
Yeah.
And do that.
It's a convenience thing,
Oh yeah.
Yeah.
So. And you get your message across.
Yeah.
I mean,
definitely.
Video and stuff like that makes a difference. They see you, they hear what you're saying, see what you're doing.
Exactly.
It's different.
Yeah.
So
exactly. Well, Paul, thank you for coming on. It's been a real pleasure. I do have a couple more questions I want to go through and ask. So, if you were to go back on your very first day, what would you go back and tell yourself?
The most important thing, and I know this ain't going to sound sexy or anything, but things will always change.
Okay.
You'll start on something, you'll have success at it, but you can be assured that something will change in our industry that will affect the way you were doing things. To me personally, going way back, I would kind of be a little disappointed with that, because I kind of mastered something, and now there's a law change or regulation that may change the way we did things. That changes what I was doing.
Okay.
So that's important because that can sidetrack you. So you have to be nimble and understand that things are going to change. You got to just keep pushing forward.
Yep.
And that type of thing.
Okay.
And then the other thing is, no matter what, at the end of the day, the more that you can spend marketing, branding, selling, whatever you want to call it, the better off you're going to be, because that's a compounding medium, if you will.
Okay.
The more each day that you do something builds on the prior day. And that's difficult. That's harder to do than say, because there are days where you get caught up in loans that you got to get involved with and stuff like that. So try to at least do something
Mm-hmm.
every day, because that will pay off
Yep.
tremendously. Because
Yep.
what you do today really pays off for you 90 days from today.
Exactly.
That's really
Exactly.
important. So that we're in that type of business.
Mm-hmm.
So that's what I would say to do.
Without a doubt.
Yeah.
I love it. I love it.
Yeah.
Awesome. Well, thank you again for hopping on.
Okay.
Tell them where they can hear from you more, or if they want to reach out
Yeah,
to
well,
you.
got all information below. You can go to North Point Mortgage, Roswell, and find me there. I'm on Facebook, Instagram, LinkedIn. Easy to get a hold of. We'd love to talk to you. Love to talk to you, especially if you're a loan officer looking to make a change. Give me a call.
Come on over and join.
Yeah, that's right. Come on over and join us.
I'll put Paul's number right here,
yeah.
and you guys can just reach out to him or myself anytime you need. So
absolutely.
Thank you again, Paul.
Appreciate it. All right, see you later.
This has been another episode of the Mortgage Playbook. Thank you guys for watching and listening. Look forward to seeing you guys next episode. Thanks.